Hey, I'm Paul Stanzik. I'm a partner here on the operations team at ParkerGale Capital. And we wanted to say thank you for downloading our weekly sales metrics playbook and the Excel template. And rather than just throw an Excel template at you without an explanation of what it's for, how to fill it out, or what you can do to interpret some of the data that you're about to start tracking, we thought we would include a little bit of an explainer video and walk you through where this is coming from, how we use it, and how you can get started to track some of your numbers on your sales and marketing team a little more simply and a little more easily. So going back to the playbook, the PDF that you downloaded, this reporting template is all structured around what we think are the two questions that matter most for sales teams. So this is all about deciding, did we have a good week or a bad week? And in our opinion, if you're giving yourself a chance to hit the number this quarter, which is all about your pipeline and your forecast, and if you're creating enough new opportunities to hit your number next quarter, you're doing pretty good. Now, the problem is most businesses don't set up their reporting so that it's easy to tell if number one or number two on this page are actually happening. And our reporting template is designed to do just that. So the way we see it, there's different ways to answer this question. Are we giving ourselves a chance to hit the number this quarter? Most teams get into kind of a deal by deal story time situation when they answer this question. Oh, this opportunity and this potential client and this big deal, we think they're going to close. And sometimes that happens, but it's hard to be predictable about what's going to close, what isn't, and more importantly, how the pipeline is changing over time. So we'll show you how we track that in a moment. And then a lot of companies just forget all about this new opportunities side of things. Do we know how many opportunities we need to hit our number next quarter? And what does that mean for how many we need to be creating this week? So we really think that answering this question number two comes down to setting a target for the weekly count of new qualified opportunities created, and then tracking not only week to week what your results were, but whether you're getting better over time using a rolling average. So if you look at the Excel, here's what this looks like in process. So this first tab number one, is where we take weekly pipeline snapshots. And most of the data that you need to input on this tab is up here in rows 12 through 20. So the way that we do this is every single week, it's March 23rd, 2023 right now, we would take a snapshot of what the pipeline looks like today. So how much we've closed won so far this quarter, where our pipeline is sitting in by stage, and what we think our forecast is going to be as the quarter rolls on. So let's say, we're 7 weeks into the quarter. We booked 50 grand this quarter. So we're going to go from 400 to 450 and closed one. You can already start to see the charts auto updating. This green bar down here is showing you your accumulated closed one bookings. So as the quarter goes on, what you would love to see is this green bar growing and eventually meeting the red bar, which is your target for the quarter. And from here, what we would do is take our snapshot of our pipeline by stage and update that. So as the quarter rolls on, since we're talking about pipeline that's going to close in Q2 of 2023, as you're managing the pipeline, closed won, closed loss, pushing things out, this is going to slope downward as the quarter rolls on. And that's exactly what's happening here if we look at our dummy data. So let's say, this is where our pipeline sits today. We're starting to see some move into later stages. Turns out, we've actually got less in this stage here. And we're updating our forecast to be the same as last week, 1,250. So we feel like we're in pretty good shape here for a couple of reasons. First of all, our CRO is saying they expect to beat the plan. Their forecast of 1,250 is above the plan for the quarter, 1,100. We've already booked 450, leaving us with a to-go bookings number, meaning the number of the amount of bookings we need to beat the plan or meet the plan is 650. And we have to-go coverage of 3.6. Every business is different. It's best if you learn what your desired to-go coverage is over time. But a pretty good rule of thumb is if you have 3 times or more coverage, you're in very good shape for hitting your number for that quarter. We also like to keep track of our next quarter's pipeline and all quarters pipeline down here. So you can see that your current quarter pipeline automatically updated based on what you had above. We did push some deals out this week. So this changes from 2,400 to 2,500 for next quarter. And our all quarters pipeline, we added some new opportunities that changed to 6,500. This is also helpful because you can see how the pipeline is sloshing around. So if you had a big slug of pipe come out up here, you can see if that was closed lost, if it didn't show up in next quarter or all quarters, or you can see if it showed up in next quarter or all quarters, meaning we pushed it, it ended up in a future quarter, that's where it's headed. So what are we looking for as we analyze these bar graphs and as we look at these in our conversations with our management team? Well, the first is that we're updating our forecast based on the data that we see. It's best if you're always upsloping, so starting conservative and building as the quarter goes on. That's a good thing. It's certainly a good thing that we expect to beat the quarter. Now, if we did see a forecast that was above target, but our to-go coverage was less than 3, that might be an occasion where we'd ask some questions and say, why do we believe you're going to hit the number? But when you talk about your plan for this quarter, your probability of hitting it, and how the pipeline is changing, this is your to-go tab to figure out how those things are changing. Now, going back to the playbook, we do think it pays to ask this first question more than once. So do we think we're going to hit our number this quarter? This is the primary tab that we use to keep tabs on that data point. But a good business is built quarter by quarter, and we think it pays to ask that question more than one way. This is the second way that we ask that question. This is what we call linearity analysis. Now, what this tab does is it compares last year's bookings. So in this case, this was Q2 of 2022, last year, how those bookings evolved over the course of the quarter. So literally, what did we do each and every week last quarter? How did that build as the quarter went on? And how much of the quarter, in a percent basis, expressed by this pink line, did we actually book week after week after week last year? Now, when you start to chart what we did this year down here in this bottom section, what this can show you is, are you ahead or are you behind the pacing from last year? So we see in this example, we feel pretty good about where we're going in terms of bookings and pipeline and ability to hit the quarter. But we see when you compare that against last year, where we actually got off to a really fast start with this big closed deal in the first week, we're a little bit behind the pacing of last year. Now, that's not a good thing or a bad thing, but it is a data point that can help you supplement the traditional pipeline view and give you a view of, okay, let's look at this 2 different ways and really get a bead on what we expect in terms of hitting this number or falling short for this year. So that's question number 1. We like to ask it 2 ways. The first way is using weekly pipeline snapshots, and the second way is using linearity analysis. Now, this second question, are we creating enough new opportunities to hit our number next quarter? That's what you're tracking on tab 3. And what we're doing here is we are simply inputting 2 numbers each and every week. We're inputting the number of new qualified opportunities that we created here on row 9 and the value of those opportunities that we created in row 10. So to do this, if you're using Salesforce, you would run a report based on opportunities created, both count and dollars, and you would sort that by week. So you're seeing at the end of each week, we're counting how many we created and what the value of those were that was created. And if we input the values from the previous week, let's say we had a pretty good week, we created 12 new opportunities. You can see that the line automatically populated down there. And the value of those opportunities was quite a lot. It was $300K in ARR. And if you drag this over, what you'll see is this rolling average line automatically update as well. Now, we think that rolling average line is super critical. If you take a 4-week rolling average, that does a couple things. One, it takes the noise out of the data, because sitting in a lot of board meetings, what we've noticed is that the trend of opportunity creation is never as smooth as you would like it to be. What it also does is it tells you if you're getting better or worse at opportunity creation. So if this line is sloping up and to the right, on average, in the last 4 weeks, we've created more opportunities each week than in a period before that. And if it's sloping down, we're actually getting worse. So if you think about looking at this through a lens of operational improvement, if we get better on average, on a rolling 4-week average at creating new opportunities, we can feel pretty good about future quarters because we're actually getting better at going out there and finding more opportunities over time. So we've also included some detail in the playbook about how to set this number here, your target amount. And you can get really detailed on setting weekly pipeline creation goals. There's a ton of really complicated math you can use to get to probably a better answer than we have here. But we like to keep it simple. And if you look in the playbook, there's a one-pager that shows you exactly how to set this number. Sometimes when we look at the target opportunity creation number, we'll say something like, the target doesn't have to be perfect. It just has to be yours. The key here is that you have a line that you can draw quarter after quarter and say, are we winning or losing this week relative to our expectations in terms of creating new opportunities? So what's to glean from this data here? Over here, we probably feel pretty good about the number of opportunities that we're creating. On average, we're bouncing around on that line. That's on an opportunity count basis. On a dollar basis, we can see that we've probably hit a trend here where we're creating more opportunities at smaller dollar values. So that could mean a couple different things. It could mean there's an issue with CRM adherence and we're putting values in the wrong way. It could mean we're just going out there and finding smaller deals than we expected. Or it could mean that, there's another issue that you need to look into. But the point is, this allows you to make the data visual. It allows you to tell if you're winning or losing very quickly. And more importantly, over time, it allows you to tell if you're getting better or worse at opportunity creation without doing a bunch of number chugging on the side. So that's it. The 3 main tabs that we use for our weekly sales metrics. It's all about taking weekly pipeline snapshots. It's about using last year's pace as a measurement to compare ourselves against this year. And then it's about setting a very simple opportunity creation target, tracking how many new deals we went out there and found versus that target, and then paying attention to if that trend is getting better or worse over time. So thanks for downloading the playbook. We'd love to hear from you if you have any questions, feedback, or you have different ways that you're tracking these numbers. There's more than one way to do this. This is the way that seems to work well for our companies, but as part of this, we also want to learn what other revenue leaders out there are doing. So, we showed you ours. Now show us yours. All right. Thanks. Talk soon.